Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you so much for joining us here as we cover a couple of topics we hit in yesterday's investment allocation meeting. We're going to talk about inflation, the topic that's just perpetually with us month in, month out, but for the right reasons. And then we're going to have the 493 stocks of the 500 that Andrew wants to point out what we should be looking for. So let's jump into inflation. And so inflation is important because obviously for many of us, it's an indication of how far our dollars will go, but also for monetary policy and how the Federal Reserve can respond both for raising interest rates or lowering interest rates. And they've been on hold so far this year because inflation has been stubborn to come down to their 2% goal. Now, prior to this chart that we have here, which is the PPI, the Producer Price Index, is the CPI, the Consumer Price Index, and that showed relatively tame compared to where it had been. It's still under the 3% bar. And another reason it's so important right now is as we look to see how tariffs are impacting prices. So economists really want to dig in and see the effect of those as they run through the economic system. And so as a relatively tame on the consumer side, that's not the case on the producer side. In fact, we had the biggest spike since we had seen coming out of COVID. So this means a couple of things going forward. The first, we're coming out of earnings season. And as we've heard from companies, their profit margins have been really healthy. A strong earnings season has been a good driver between the overall market growth of the past couple months. However, that margin could come under pressure if they were continue to have price pressures like this with tame consumer prices going forward. So a couple of things have to happen. Either margins would come under pressure or we'll see that CPI tick back up, which would then in turn make it tougher for the Federal Reserve to really cut much beyond the September and the fall timeframe. So seeing how those two and that dynamic interplays is going to be critical over the next couple of months and influencing just how far rates could drop, if at all. So that's the inflation side. I'll pass it over to Andrew and look at the technical breadth of the market.
All right, thank you, Adam. Adam mentioned we're going to look at 493 stocks. Don't worry, we're not going to look at them individually. What we're talking about is we often discuss the Mag 7, the 7 largest stocks that really have been in the driver's seat for quite a while, both with the markets going higher and lower. What's also important is to understand what the other, again, 493 stocks are doing. If we can zoom out on this chart, we're looking at 3 different things. First, on the top panel is what we just have, the S&P 500, the index that we're all familiar with, which, a reminder, is cap weighted, meaning that the largest stocks get the most say in what the index is doing as the largest weighting within the index. In the middle, we have those magnificent 7, those 7 stocks: Apple, Microsoft, Google, NVIDIA, Tesla, the 7 stocks that really have been carrying a lot of the water for the market. In the bottom panel, we have an equal weighting of all those stocks. All 500 stocks in the S&P 500, regardless of size, they each get the same weight, the same say in what price does. What's significant about what's happening in the market right now is we've seen a break higher, getting back above the prior highs in both the cap weighted version as well as those 7 stocks. They have been doing extremely well. Those are getting new highs. Those are in solid uptrends. What we're now waiting for next is getting that equal weighted index, that one in the bottom panel, to have that breakout and that to move above the highs that were seen at the end of last year. So we're not quite there yet. We're kind of bucking up against those prior highs from November, December of last year. And so that's what we really are focused on, to see if this trend is able to continue higher, provide that next catalyst, is getting an expansion of these new highs, seeing a lot of other stocks besides just the handful that are really moving things right now, see those start to move, get an equal weight breakout, and I think that's going to help provide additional confirmation that we can continue to see stocks broadly in the cap-weighted S&P index move higher. So that's what we're focused on right now. We have a lot of catalysts that could potentially have that breakout or cause us to see some weakness going forward. So we're very in tune with what's going on in the market right now and trying to follow what the next catalyst will be.
Excellent. As always, thank you, Andrew. Thank you to all of you for giving us your time. As always, if we can be of help, please don't hesitate to reach out 800-928-4001 or scan the QR code and do so electronically. Thanks, and have a great weekend.